All right, this is a deep dive on Rogers Communications, ticker symbol RCI. This has been a long time holding for us. I think somewhere in the neighborhood of 3 or 4 years. Really like the company. Canadian telecom, TV, phone, internet, the whole thing. Not happy with the TV portion. Typically, it's always doing poorly, which I think is the case for most telecoms. It's definitely a dying business, but it will take some time for it to die out. In the interim, I think telecoms are kind of stuck with having to provide that service because there's still persons out there that require it. Looking at the balance sheet, just want to quickly explain kind of how this works. Everything that you see highlighted is predicted value. Okay, everything else is actual value, and this is directly from the Rogers website as well as the SEC. And so the percentages are just the differences between the two columns. So the difference between 2021 and 2022 is less than 1%. So it's shown there as 0. And so forth. The way that I come up with the predicted values, well, of course, the balance sheet is as of June 30, 2024. Those are actual values. But whether or not these will be the values at the end of the year, we don't know. Can't predict that. What we have done, though, is try to predict what the balance sheet is going to look like a year from now. All right. And that's done statistically, right? This is based on 3 years of data from 2020 through 2023. And of course, with the information that we have currently from 2024. And so here in the highlighted area, what we're looking at is actually the current number for buildings. Now, Rogers Communications purchased Shaw Communications, another Canadian telecom in Canada. And so when that purchase was made in 2023, you see there was a huge increase in buildings because, of course, they acquired all of Shaw Communications buildings, offices, and all that sort of thing, almost doubling the number of buildings. Now, I do actually expect that number to decrease. I don't think it's going to continue to increase, but statistically, we see that over the last 3 years, it has increased roughly 22%. And then there's a standard deviation of roughly 5,000 one way or the other. So what that means is that this number statistically can be anywhere from 19,000 to roughly 30,000. Okay, that's what you see here. And so we have a choice of where do we think this is going to go. Now, I don't expect the number to decrease way down to 19 or 18, but I also don't expect it to increase to 29 either. So, you know, the option is to either keep it the same at 24,691 or choose another option here. And so for simplicity, I chose another option, which will make some sense here in a moment. The other thing, intangibles. Don't like intangibles. I usually keep them out of the calculations. But for this particular company, if I do not include intangibles, the balance sheet is almost a negative across the not really. That's interesting. Wait a minute. I thought it was. Maybe I'm wrong. 0, 0, 0. Oh, there we go. That's why. This. And maybe we can keep intangibles out of this. Let's see. So with intangibles taken out, yeah, see, we have a negative balance sheet. Let me make sure this one is taken out as well. Oh. All right. So now we see with intangibles taken out, we have a negative balance, okay, which isn't great. You can't do any math with a negative number when it comes to this stuff. Not only that, but if this was true, then the company would be completely bankrupt and the stock would be nearly worth. So we can play with the numbers here, make it 50%. And I think I didn't get a positive net balance sheet number until I got to somewhere around 75 to 90%. So this one, yeah, this one. So 2021 and 2020 actually have positive balances, but we can see the rest of the years are negative. So, um, if I put it at 90, I think that gives us positive across the board. Yeah, just barely. I guess if I wanted to, I could play around with it and get it just right. Because I do like to give some discount for intangibles because intangibles are completely made up numbers by the company. They do have to follow accounting rules and principles in order to arrive at the number, but there's many different ways to arrive at the number, and a lot of it really is speculation. Um, but again, I have to include the intangibles here just so that we can get a good number for the balance sheet. And those intangibles are exactly what you think. It's going to be, brand name, right? The Rogers name. It's going to be the brand name of the Toronto Raptors, the basketball team. The brand name of the Toronto Blue Jays, the baseball team. The brand name for the Toronto Maple Leafs, the hockey team. And while it is true that those names and those brands do have some value, what that value is only what the market is willing to pay for. And so, unless you're going out trying to sell these brands every year, you really don't know what that value is. And I sincerely doubt that that's what they're doing. So, keep it at 100% just because. Same thing goes for goodwill. This is literally the amount of money paid above the actual cost for an asset. In this case, it's going to be Shaw Communications, which again was something done back in 2023. And just like Rogers, Shaw Communications has intangibles, right? Their brand and whatnot. And so when you pay for the company, part of what you're paying for is the actual assets themselves, the buildings, the phones, the internet wires, all that stuff, right? But you're also paying for the name. You're also paying for the brand recognition. And so the amount that's paid for the brand and the name and all that stuff, that is considered goodwill. Okay, and that goodwill is amortized over the course of 15 years, which is a tax write-off, but it has nothing to do with actual cash. Okay, but again, I had to include it here because otherwise it's going to give us some bad numbers. And so you see this huge increase in goodwill here. Okay, yeah. And I just have it at all zero. Let me bring this down just to be safe. I think this is going to throw off the stats though. Let's see. There's a reason why I had it there. Yeah, that's okay. So anyway, that's intangibles. Investments, exactly what it sounds like. Rob's Communication invests in lots of different stocks and different companies. It's just part of their cash management strategy. And so that's what we have here. Contracts is exactly what that is. It's contracts that they have with different TV stations to show certain games. It's contracts that they have with customers. So when someone signs a contract um, for 12 months of cell phone service, that contract itself has value, right? Because if you wanted to buy Rogers Communications as a company, you'd also be buying those contracts. So that's what we have here. Pension assets, again, this is kind of what I was talking about in the last video. Rogers is an old company in Canada. They pay their employees a pension. Well, the way they pay that pension is that they have money that they invest into other companies and stocks and bonds and this sort of thing. And that's how they pay out their pensions. And so that pension that they have above what's needed to pay out is considered an asset that they continue to hold. Inventory is actually a really important number when it comes to phone companies, simply because the more inventory they have, the worse it is. You want to see either low inventory or declining inventory, meaning that they're making a lot of sales and not holding on to phones. When we see an increase in inventory, it means that they have phones that are not selling, right? And so we see over the years, we have an increase here, a decrease, small increase, and another increase. And so it's kind of all over the place. But ideally, like I say, we want to see that small number. All right. For sale, again, this is a number that I don't expect to be this high. Matter of fact, I expect it to be zero. If you look out at 2022, 2021, and 2020, that number was zero. But in 2023, because of the Shaw Communications acquisition, they had to sell off some of their assets in order for the government and the regulatory committees to approve the purchase of Shaw Communications, and that's why we all of a sudden in 2023 have this for sale number. The 2024, the number is still there, so they have not gotten rid of those assets, but they are currently for sale. Now, where do I expect that to be at the end of 2024 into 2025? I expect it to be zero. If they're still holding on to it, that's that may be a problem, but it's still an asset, still something that they can use. And so that's the reason why I went for the lower of the numbers here, the 69. All right, goodwill, we already talked about that. The number right now is 16,000, which is way above what it has been historically. Now, this number is going to stay. I don't expect it to increase. It will decrease because of amortization, but I don't think it's going to decrease all the way down to 10,000. Let's go ahead and use that number because I do not expect it to increase at all. That number is going to basically stay put. All right, cash. Cash overall has declined over the years. And so looking at this 451 as of current, we expect that to be down, but there isn't an option. Definitely don't expect them to have negative cash on hand. That's just not feasible. It's definitely going to be positive, but out of the positive numbers we have, there just aren't any great choices. If we look back at 2023, the number was 800, 2022, 463, 715, and then 2020, there was a bunch of cash on hand. So, again, I just chose the lesser of the three here, 710. All right, receivables. Again, this is all of the money that is due to Rogers Communications. Again, this is typically due to cell phone contracts and cable contracts, and also contracts dealing with sports, TV, and whatever money they have coming in from their sports team. Again, this number has increased over the years, and I do expect it to continue because it means that they are basically growing their business, right? And so 4853 is what it currently is. And so I'm expecting that to move into 58 to roughly 6,000. In 2023, the number was 5,000. So if we get to 5,882, that's a nice increase that I don't think is out of the ordinary. All right, let's take a quick look at the growing assets. So we go back to 2020, we see 38, roughly 42, 42.8, 69, and 69,318. Looking for 72. Makes sense. Makes sense. Now, keep in mind, this total is a sum of all these highlighted numbers. And the reason why that's important is because I wanted to see, after using these predicted values, does it fall in line with the actual numbers, right? And again, the actual numbers, we see that there has been an increase on the asset side of the balance sheet, and the increase has been, you know, kind of a $3,000 jump there, 1,000 jump there, you know, almost 3,000 jump there. Currently, there's a small increase, and so I don't think it's out of the realm of possibility that we have maybe another 3,000 jump. If not, you know, roughly the same as it was in 2023. But definitely, I do expect an increase. All right, turning to debt now. Again, big number because this affects the cash to debt ratio, the assets to debt ratio. We see that it has increased over the years, average 32%, currently sitting at 43.6. And so I do expect this to get up to 53, maybe 56, but 53 is what I got here. We see that there was quite a bit of debt taken on with the Shaw acquisition, whether or not that was debt to purchase Shaw or whether or not that is adding Shaw's debt to their books. They did take on quite a bit of debt there. And so I do expect that to continue, if not fall off just a bit. All right, payables. This is, you know, everything from rent to payroll to, you know, all the stuff that you got to pay for in order to run a business. Currently sitting at 36.31. This is something that has historically increased in value, so we expect that to continue. Again, this has a lot to do with the Shaw acquisition as well. We see back here 27, 34, 37, and then in 2023 jumps up to 42. Currently is at 36, so I do expect that to get a bit higher. 48, I think, is the best option out of what we have here. Definitely don't think it's going to fall at all to 35. And 49 is not really far off from 48.52. So I think we're okay there. All right, tax deferred. I didn't get any details on this one, other than it is a real number. It is what they're reporting to the SEC. And so we have to include it here. And this is tax that they have to pay, but they have not paid yet. For whatever reason, I don't know. But it has been a consistent number throughout the years. Looks like it was in the 3,000s, and then it jumps high to 63. Again, I think this has everything to do with the Shaw acquisition. Currently, it's sitting at 61. Statistically, it can go up or down about 1,500. So, you know, anything in the really 7,000 range, I think is decent. And 7866 is the closest thing we have available to us. So that's what we're going with. All right, provision. This is credit losses. So they do have customers, of course, that can't pay their cell phone bills, can't pay their internet and cable bills. And so they withhold a little bit of cash and just hold on to it just in case those customers can't pay their bills. They're able to, you know, basically not go broke. It's not a huge thing for a telecommunications company, but it is interesting to look at, though, because if the telecom company thinks that their customers won't be able to pay their bills, they're going to increase their provision. And that kind of gives us the insight as to what the companies think, where the companies think the economy is headed, right? So And over the last couple of years, we see that it has slowly increased. As we go back, it's hovered right around 50, that kicked up to 62 currently. And so the question is it going to come back towards that 50 or is it going to stay high, right? Looking back to 2023, we see that it did tick up just a bit. Again, probably something to do with the Shaw Communications merger, and it's jumped considerably this past year. So, 59 is a not a huge jump, but it is an increase from the 54 from last year. And we really don't have much more to go on. Make sure I'm looking at the right. Yeah, yeah. So that's it. Five, one way or the other. Not a huge jump. All right. Investments. This is money that is due, that is owed on investment. Okay. And so we see back in 2023, the number was 22, but it's always hovered right around that 1,000, 1,200 range. Currently, it's at 17. So I do think it's going to increase. To be honest with you, I don't think it's going to get all the way back to 22, but it can, statistically speaking. 27 is the best option we have here. But to be honest with you, I can definitely see this thing hovering around the 16 to 15 range. All right, and then lease agreements. This is leases on um, cell phone towers, leases on what do they call those things? The telecommunications company have to purchase leases on, well, for lack of a better word, like airwaves. I forget the technical term for it, but they have to purchase right to certain band, a certain bandwidth or whatever. And so that's going to be part of the leases along with building. All right. And so what's important here is the net, right? Because what we want to see is a growing balance sheet. Okay, so we see 10, 11, and fairly large drop off in 2022, back to 11 in 23. And so we're currently sitting at about 11 for 2024. I expect that to continue. However, based on our predicted numbers, we're sitting at 300. So that tells me that there is definitely something in here that is either, yeah, something in the liability section that is way too high, way too high. And I have to imagine that it's probably the debt, because taking on that much debt over the next year, unless they're looking at buying another company, I don't see why that happens. So let's do this. Let's keep the debt even, and that gives us a net at 10,492, which is still lower than 2023 and current, but it's at least a bit closer. And if we wanted to, I guess we can kind of play around with the investments number as well. But I want to be careful with that one though, because that is a huge difference, I think. Puts us at 11,575. I think that's fair. That shows an increase, which is what we've seen over the years. Okay, and let's take now a look at the shares. Again, one of these things that, as we can see, the share count has been, very stable, hasn't moved around much at all. And then in 2023, they issued a bunch of shares in order to purchase Shaw. And so right now, the share count is actually 533. I don't expect that to change much at all. I don't see a reason for them to issue any more shares unless, like I said, they're going out to purchase some other company. But I don't see that happen. So let's go ahead and make that number even. And why is this? Oh, this is the for sale. Well, that's just going to be a silly number um, for that. All right, so book value, $21.72. Any dollar above that is considered an intangible book value, right? So it's basically the amount that someone is willing to pay over what the business is actually worth based on the balance sheet. And so that makes the price to book 1.87. I'm curious to see what the price to book for Rogers is now. Always interesting to see what my numbers look like versus. Okay, price to book 2.77 is the current price to book. All right, and I have 1.877. So, it's not the same, but it's close. And so looking at the projected price based on that price to book, we're at 34, 64, 57, and then 100 and a negative 166, and that has everything to do with that negative book value that we saw back there in 2022. So, being that the current price is $40, I'm going to say that Rogers does not typically trade based on the book value. Now, I do not have any of their competitors to look at to see if this is true across the industry, but I am almost certain that when it comes to telecommunications companies with all of their intangibles and whatnot, that it's not going to trade based on book value at all. And that's the reason why, a lot of those predictive values don't matter very much. But it is kind of cool to take a look at and see that the current price of $40 is within the realm of where these numbers are. Now, does it make any sense that Rogers is going to be anywhere near $64 in the next year or two? I doubt it. But it's not a outlandish number other than this negative here. All right, let's take a look now at the profit loss statement because clearly this is what the stock price is going to trade on. Again, highlighted numbers is our predicted values for the next year. And these are actually predicted values as well. What I did was I took the second quarter numbers and just multiplied them by 2. Okay, to figure out what the end of the year profit loss statement may look like. All right. Now, I do want to say right away that Rogers Communications, along with many telecoms, tend to make more money at the end of the year because of Christmas and whatnot. Right, a lot of people buying new cell phones, Christmas presents and stuff. So it's not crazy to think that the numbers that we see here, simply multiplied by 2, won't actually be a little higher because of that effect, right? But let's take a look over the years. And I want to say too, these averages here, the average percent increase is not including 2024. It's only including 2023 going back to 2020. Okay. And so from 2020 to 2023, the revenue has increased on average 12%. All right. And so when we see an increase of 19,988 from this 19,308, which is only 4%, it's definitely doable, right? Now we see a huge jump here from 22 to 2023. That is going to be everything to do with Shaw Communications. Prior to that, it was a steady increase of literally 5% every year, and so 4% is right on the money without trying too hard. And so when we come over here to our predicted value for the next year, our options here that make sense anyway is going to be 21,611 and 21,711. I just went with the lower number just to be conservative about it. But that does put us basically up 10% from 2023, which I think is difficult to get to. But again, it is doable. It is doable. This number is very close to 20. And so, just to get another bump within another year or so, it's not out of the realm of possibility. All right, interest. We see that interest has actually decreased over the years, which says a lot about the management of the company and also about getting rid of debt, because as debt decreases, interest decreases. And usually when debt increases, interest increases unless you go out and you find cheap debt, right? I'm not sure what's going on here as to how they've managed to decrease their interest over the years. But as we can see from 2023 to current, it has increased just a bit. So anyway, again, it's one of those things where I really don't think the interest is going to increase that much, honestly. Matter of fact, let's make this 26 versus 27. I don't see it going down to 13 or 14 when it was 2000 in 2023, unless they're extinguishing some debt. All right, cost of goods sold. This is just going to be, whatever money they have to spend in order to make money. Okay, so whatever they're spending on, I guess, running cable to someone's house, or whatever money they're spending on providing cell phone service, all that stuff is going to be included in here. And so we see that over the years, this number has dropped 10%. I do usually, when you purchase another company, it makes your cost of goods a lot cheaper. And so you're able to offer the same product or service to your customers at a cheaper rate, which is usually your argument when you go in front of these regulators, is you say, hey, if you allow us to purchase Shaw Communications, we will make our services better and cheaper for our clients. And so that also means that the cost of goods is going to come down as well. So in 2023, it was 10.7. Again, predicted value 10.910 is what we have here. And so does that increase to 11.859? And I'm sorry, I said I said that it decreased. I'm looking at the negative number, but it actually has increased. That's what the negative 10% is. So yeah, we see from 8,087 to 9 to 10.7. So it's going to steadily increase, but does it increase to 11.859? I don't know. That's a big number. Let's make it 11.822. All right. Other, to be honest with you, I forgot what this is, but I did include it because it was an actual expense and not just something made up. Typically, what I'll do is, if they don't specify what those other expenses are, then I don't include them. Okay. In this case, they did specify in the earnings report what these other expenses were, and that's why you have them here. I just don't remember what they were. So anyway, huge number here. As you can see, this positive 15 is actually other income that came in versus other expense. But it's been a really low number until we get to 2023. Again, everything to do with the Shaw Communications. 232 is the current number, and then I just doubled it, and so that's how we get 464. So do I think it's going to increase to 2490? I don't think so. It can get there, statistically speaking, but I highly doubt it. Let's go for the 545. How about that? All right. Impairment. This is going to be when we talk about calculating intangibles. All right. This is going to be every year, every quarter, they go back and they calculate, what those intangibles are worth. And if they find that they're worth less, then that is what is the impairment. Same thing goes with any stocks or bonds or investments that they hold. If those investments fall in value, but they have not sold them yet, technically they have not made a loss. They have not lost any money because you don't lose any money until you sell the stock. But it is an impairment. So that impairment shows up on the profit loss statement, not as a cash expense, but as a tax expense. So it helps out on taxes, but it really does nothing for cash or really net profit, right? But again, it is there, and it is something that we want to keep an eye on, because if the impairment goes way up, it means that at some point they are going to probably lose some money on selling some investment, right? So we see that the number has been, I'll say it's been about the same, and then a big increase in 2023, of course. Currently, though, the impairment is only um, uh, 3. It's weird even saying that. It's only 3. And so I just doubled it to -6. Um, does that remain? I think so. I don't see the impairment going up any higher, unless maybe they do some type of calculations in the back half of the year that they don't do in the beginning of the year, which I highly doubt. And so I just chose the lower of the numbers because I really didn't know what to do with this one. All right, tax expense. This one again has been about the same: 580, 569, 609, 517 last year. Currently sitting at 213, double that to 426. They do tend to make more money in the back half of the year, so I actually think this number is going to be a bit higher. So based on that, I just chose the lower of those, the 479. But there's no reason why this thing can't be 500. Okay. All right. That gives us a net of 6,000. Let's take a look at what that means for us here. Going back to 2020, 42. It was a small drop off to 41, back to 42, and then a jump to 49 because of Shaw. And then again, this is a predicted value, 58, which is a fairly large jump. I don't know if it's going to get that high. Honestly, I really don't. So that gives us 6,000 here. Tough to say. Tough to say. I'm going to say it's going to be probably less than that. I may play around some numbers here and see what we come up with, depending on what this looks like. All right. Earnings per share. Based on this net profit of 6,000, that gives us 11.28 earnings per share, and that is, I'll say, sort of in line. I mean, we see that it has increased a bit over the years. A big jump here in 2023, 9.38. Let's see about making this. Let's see about making this 941. All right, 1041. Let's see what that looks like. All right. Just cause. All right. So the earnings per share, 1041. That gives us a PE of 3.9. And if we look so far in 2024, the PE has been as low as 323, as high as 438. I shaded these just so we could see the difference here. Again, 39 is the low, 535, and then 430, 526, and 386. So the 390 is right on target of where we can expect this to go. But more importantly, it's at the lower end. Matter of fact, it's like, yeah, the lowest. Yeah, the lowest price. And so what that tells me is that let's move this back to the original value. And let's see. The PE of 3.6, which is even lower. So yeah, I don't think it gets there. So this net profit, I don't think it's going to be that high. I really don't. 394 is more about right. If we bring it down to 4,000, which is way too low, it gets us all the way to 542. And as we can see, 542 is again within the realm of possibility. But looking back at 2023, it's just I don't think that happens, especially with this Shaw thing going on. So let's kick it back up to 55, and it gives us 394 as a PE. And so that tells me that we do have just a tiny bit left to go here. Projected price 39, 52, 49, and 81, which is not going to happen. Current price is 40.65. I'm going to say that right now, this stock is fairly valued. I don't see it as undervalued at all. I can play around with that net profit all I want to, and it still puts us right in line. Again, it's 386 and 390. It's kind of the low point as to where this is going to go. So it means that there may be some upside on this one. There's not much downside at all. Definitely some upside. How much is hard to say. Does it get all the way down to 320? Yeah, does it get all the way down to 320? No, I don't see that happening. But that net profit of 6,000 is definitely there. And if it is, then conservatively, we're looking at 42.68 as a share price. So again, fairly valued. There is some upside there. Not much downside, if any, at all. And the dividend, of course, is super, super duper safe. Sitting at about 12% now. It's never been above 20% of the net profit. So there's absolutely no concerns about them paying a dividend. This is a position that we'll continue to hold. We'll continue to reap the dividend. And there's a bit of upside, but I'm not going to look at purchasing any more unless something really changes. Maybe, if they can somehow just like blow up their net profit for whatever reason and make it all the way to 7,000, which I seriously doubt. Um, you know, it's there's no need to purchase more of this company. The 6,000 seems about right to me. That puts them at about 42.68. If we make it 55, that gives them a price of 39, meaning that it's still, fairly valued because, we're talking about $1.50 difference here. So again, fairly valued, definitely some upside, tiny bit of downside.